Guys, in this video, I'm going to show you an unreal trading day from today where we gapped down like 1,000 points on the Dow and 100 handles on the S&P, okay? And I'm going to show you how patient traders wait for a new trend to start before they even think about going long. All right, so let me show you how we caught the absolute low in today's sell-off. Let's do it. Hey, what's up guys? It's Mark here at Dino Trading. Hope you're doing well. Starting off the week with a bang to the downside here in the market. So before we get to the videos, I'm going to show you how we nailed the low. Even though we had a huge gap down, there were still awesome opportunities today. I wanted to answer a quick question I got from someone who asked me, hey Mark, what's the difference between candlestick charts and price-based charts? Okay, basically he wanted to know the difference between dyno bars and candlesticks. And you know, until you actually compare price action charts to your candlesticks or indicators, I can totally understand and I can see why people never expand their horizons, right? I feel that people are lazy. They don't want to change because it's hard to change. Nobody likes change. But the reality is, if you want to get better and you want to improve at anything, doesn't have to be trading. If you want to improve and get better at anything in life, you got to be open to change, right? Because whatever you've been doing hasn't been working out. And so you should actually be embracing change, right? Anyway, so for those of you guys that don't know, the dyno charts is a price action based chart style. It's, in my opinion, very good at being able to forecast the trend before it starts. And how it works is you take your candlestick chart and with one click of your mouse, you make the chart look like this. Okay, where it becomes a simple signal-based chart, you could say, right? Like if I look at candlesticks, I mean, first of all, it looks like crap, right? It's a bunch of garbage, but I'm not clearly able to see any type of signal, right? And that's what I want as a trader. So if you want to be able to spot signals, and for me, I define a signal as the ability to forecast a trend, right? I want to get into a trend before it actually starts. That's important to me, okay? Well, how do I do that? And these dyno charts help me do exactly that. So today was actually a little bit deceiving for those of you guys who just trade the open, right? Because if you're looking at this session right here, which is the morning session, okay, on the S&P Eminis, it looks like a pretty good day. It looks like an okay day. But if I show you the overnight session here, all right, let me get the overnight session. I'm going to squish this in here. I'm going to try to drag this, right? You can see that today was far from normal, right? Like we were up here in the overnight session, 100 handles away on the S&P and 1,000 points away on the Dow. While you might have missed this massive downtrend where the dyno charts completely stayed red for a huge downtrend, don't worry, there were plenty of opportunities to be had, just like there's always plenty of opportunities to be had. And by the way, you will never have been able to spot this downtrend on a candlestick chart. Okay, so that is the main difference, all right, between candlestick charts and dyno charts and really any type of price-based chart, okay? That ability to forecast the trend. But for right now, I'm going to go ahead and fit this right here. I'm going to press the F button to fit it back and delete some of these drawing objects here, clean up the chart, and let's zoom in as best as we can, stretch out the x-axis, and I'm going to tell you why I really liked this potential long signal right here, okay? And again, you don't know for sure if this is the bottom. Nobody does, right? All you're really looking for is a low risk opportunity at this point to try to catch the bottom, because you really don't want to be shorting a market that's already gapped down thousands of points, right? If your market, especially in the futures index markets, if you're looking at a gap down of 5%, you'd be crazy to try to short that, right? Because everybody else in the world is buying that, right? So you kind of have to use your own common sense. But what I really liked about the signal bar, guys, and for those of you that know, the first green after any red, that's your long signal, and you draw the highs and you draw the lows, and you wait for the price to retrace, right? It could give you a shallow retracement, it could give you a deep retracement like we got today. I mean, it could give you any type of retracement, but I like to wait for about 30%. That's really when I start looking for trades, and I'm fully prepared to take a couple of losses until the trend eventually lifts off, right? That's just how it is in trading. You guys know that, right? In order to be able to capture a big trend move, you got to be dancing in this area a little bit, maybe more than once, right? But anyway, so what I liked about this bar, okay, this green bar, and also why I had a feeling it was going to be a very low risk setup, okay, are these three things, okay? And for those of you guys that are, beginning your trading journey, or maybe you're an intermediate trader, you'll get in the habit of recognizing when the market gets flushed, right? When the market flushes out the weak hands. So what I liked about today's potential setup is we had a huge gap down. I'm talking 5%. That's a major move, all right? In an index. It's not a major move for stocks, but trust me, for indexes, 5%, massive, all right? Also, to me, it kind of felt like the weak traders got flushed out, right? All the retail traders, the momentum traders, we've had this. Today was the third day of straight selling. So that's kind of what I mean when I say, the weak traders were just flushed out after three straight days. And of course, guys, this, the retracement, right? I'm always conflicted between, do I like a 30% retracement, which would be like, I don't know, somewhere over here, right? I've always found 30% to be pretty consistent, but, sometimes, do I want to wait for a 50%, which would be a little bit over here? Right now, in both cases, the retracement triggered. So I guess technically it would depend on your personal preference, but I really like the 30%. I feel like this is going to capture most of the retracements. Yeah, you might need a couple of stops if the retracement gets a lot deeper, but you certainly can capture. That's about 30%. This is about 30%. This is 30%. I mean, you definitely capture a lot of the retracements at 30, in my opinion, okay? But, to summarize, guys, why I thought today was just a great trading opportunity on the dyno charts, really in all asset classes, Forex, futures, and stocks. If you ask me, this is how you build your own criteria, what you think in your own common sense. What does a good opportunity look like on a massive down day at the open, or could be the opposite, a huge up day at the open, right? What is your criteria for being selective, okay, and being very patient, obviously, right? Keep letting those weak traders get flushed out, all those candlestick traders, or all those guys that tried to bottom call, right? Instead of waiting for the first green, they'll just randomly bottom call it, right, using whatever garbage indicators they use, right? We want to wait for a trend to start before it actually starts. How do we know that, guys? You define a common sense approach, right, to filtering your trades, to forecasting the perfect entry, to mastering trend lines, and really figuring out very good risk-reward profiles, right? Those are all things that come into play, guys, all right, when you're looking to catch huge trend-based moves. Okay, so those are all things that are very important. But what I think helped me the most today was following these three rules, right? Especially the last one, waiting for a 30% retracement. And, you also kind of have to go with your gut sometimes, Today was one of those days where having the right type of charts and having a decent enough experience trading, then you almost couldn't go wrong today. So yeah, that'll do it, guys. If you have any questions or comments on the dyno bars, get in touch. The link and email address is right below this video in the description. And guys, I hope you had an awesome trading day today. I think we're going to see many, many more days like this. Hopefully it'll be like this again tomorrow. Hope you guys killed it today. All right, thanks for watching, and I'll see you on the next trade.